Good morning, good afternoon, good evening, whatever time you're seeing this. My name is Chris Elliott with RE/MAX Action Real Estate with your September 20 housing market update. So very excited to be delivering this to you guys. We're going to start as we do always and just go through some national news. I want to start with a quote from Mr. Frank Martrell, the president and CEO of CoreLogic, one of the biggest real estate data companies out there. He said, on an aggravated level, the housing economy remains rock solid despite the shock and awe of the pandemic. That's been very much the story this year, especially over the last couple of months. Real estate has been one of the industries that has continued to remain strong and really led the charge of bringing the United States economy out of the kind of mini recession that we went through. So, as you guys can see in this graphic, purchase applications are up at a good scale year over year compared to last year. So we're up about 25–30% above what we were at this time last year. Purchase applications, those are folks that have gotten a property under contract and they are applying for a purchase mortgage. So that number is up. Home buyer traffic is up significantly. Looking at the numbers from July, the South, particularly as a region, was up 46.7% from July of last year. So a huge number of folks going out and looking at homes. With that, the projections on home prices are continuing to look good for the remainder of this year, going into next year. So as you can see, pretty much across the board, other than house, everybody's projecting very healthy appreciation over the last 12 months. This is something that we saw a couple months ago where some of the projections were a little bit less. And if you look at the next graphic, you can see some of the bigger companies have revised their projections. They weren't looking as bright and shiny a few months ago as they are now. So for example, Fannie Mae, their original projection was that we were only going to have 0.4% appreciation. They've revised that to 4.4%. Probably the biggest one is CoreLogic. They thought we were going to see a 6.6% depreciation in home prices, and now they're not too optimistic, but they revised it to say now we're going to have a 0.6 appreciation in home prices. So I would guess we're probably going to be somewhere in the 4 to 5% range of appreciation for our Richmond metro market, just based on what we're seeing on the front lines with home prices being bid up. So that is that. And one of the cool things, one of the things that's fueling this, not only in the number of purchase applications increasing, but home prices going up, is that buyers' purchasing power has grown with the lower mortgage interest rates. So looking at a quote from Black Knight of Mortgage Daily News, those shopping for a home can afford 10% more home than they could just a year ago, which with a median sales price of roughly $300,000 across the country, that's a 32% increase in what a buyer can purchase while keeping their mortgage amount at the same payment as they could just a year ago. So that's a huge help to buyers out there, which is somewhat fueling the frenzy that we're seeing in the housing market. All right, so we also want to address something that we believe you're going to be seeing over the next couple of months, especially as we get closer to the election. And as the eviction moratoriums, if and when they begin to lift, one of the big headlines that we believe you're going to see is that, man, evictions are going through the roof, or foreclosures are going through the roof. Rather, it's a very sensational headline. It's also something we believe presidential candidates are going to grab onto, blaming one party or the other. So, read you a quote from Jeff Ostrowski of Bankrate. The COVID-19 pandemic will lead to a rise in mortgage defaults and foreclosures, but as the housing market muscles through the economic downturn, it looks as if foreclosures will form a trickle rather than a flood, housing experts say. Part of the reason is that as opposed to 2007, 8, 9, 10, Americans, as a whole have a lot more equity in their homes than we did before. We've been a lot more conservative with our equity than we have in times past. So even if folks get into a rough patch, they're able to afford to sell that home traditionally, as opposed to being in a no equity or low equity situation, just letting that home go to foreclosure. Another thing to look at too is the percentage of distressed sales. We are at all-time lows. So if you compare ourselves to January of 2012, where literally 35% of all real estate sales were distressed sales, be it foreclosures or short sales, we're now down to about 1%. So one headline that we think you'll see is that, man, The foreclosure rate has doubled or even tripled over last year. Keep in mind, we're at very, very, very minimal rates right now. So even if it triples, well, that's not a good thing, and we don't want to see anybody go through that. We're still going to be at historically very, very low levels of distressed sales. So something to keep in mind. Now, going into our local Richmond market, the big question mark, the big thing that I honestly don't have the answer to, that in just discussions with peers that we're all having is, hey, are we going to see the typical fall slowdown that we tend to see in our market? So historically in our Richmond metro market, it's a very cyclical schedule around the year. Once the kids go back to school, we see the market taper down a little bit, and then it gradually tapers down as we go into the winter. Even though we've had very strong fall and winter years the last 2-3 years, historically, if you look at the data, that's what we see every year in our Richmond metro market. But if you look at the pending sales, so this is a graph that shows you pending sales month by month, both in 2019 and 2020. As you can see, last year was a very typical year for Richmond. Home pending sales, homes going under contract, kind of peaked in April, and then it gradually went down for the remainder of the year. Whereas this year, as you can see, we were off to a great start. We kind of had a hiccup in the month of April, and then we've just launched and continue to go up and up and up, where we're basically peaking out in August. We might even continue to peak in September, but that's the big question. If you look at the number of new listings coming to the market, once again, typical Richmond market last year, that kind of peaked out in April and then gradually went down from there. As you can see, we've kind of had an atypical graph this year. Just the numbers are all over the place. But we did see a slight decrease in the number of new homes coming to the market in the month of August. But then the other factor that we've got to look at is, even if the number of homes that are coming on the market decreases, even if the number of pending listings, the properties that are actually selling, goes down, we're still at a historically low month supply of inventory, which is just a metric that tracks, hey, if no new homes hit the market, how long would it take to sell out current inventory? 6 months supply of inventory is considered a balanced market. We're at 1.5 months supply of inventory, which means we're in a red hot seller's market. So my prediction is that we're going to continue to roar on through the end of the year. But even if we don't, just based on the numbers, homes should continue to sell for amazing prices in short order, just based on the demand and the very, very low inventory. So hope that makes sense. But kind of curious what you think is going to happen with the market into the fall and the winter. Let me know if you're watching this on one of our social channels. Let me know in the comments what you think is going to happen. But here's the advice we're giving to our seller and our buyer clients. With our sellers, we're recommending that they get on the market now as quickly as possible, because here's the thing, we're not sure what's going to happen in the fall and the winter months. As we go farther into the fall and winter, we're not sure if the market's going to continue to be robust or if it's going to cool off, but we know the market that we're in now. We know it's super hot right now, so we're recommending our clients, don't wait, get on the market now, take advantage of what's in front of you. We're also recommending, hey, prices are already great. Let's not try to be super ambitious and set a crazy outlandish price record. Because we don't know if we have the margin for error. And what I mean by that is, if we're having a conversation with a client in March or April, we say, hey, you want to try it at a super high price that has never been done before, that the comps say that it shouldn't be, that's fine, because we know, hey, if we don't hit that price point, we've got the time in a month or so to make that price reduction and still sell in a great market. We don't know if we have that luxury right now. We don't know, hey, is the market going to cool off in October, November? We simply don't know. So we recommend our clients, hey, prices are already amazing. Let's just price it at fair market value. You're potentially it's going to get bid up anyway with multiple offers, but let's not try to hang the moon with a crazy outlandish price here. And then lastly, as always, properly prepare the home before you get it on the market to correctly make a splash. Or how did I word that? To make a splash on the market. So what we mean by that is, hey, let's make sure we're staging, let's make sure we're decluttering, let's make sure we're doing all the right things that we know is going to get you the highest price. Yeah, you can slap a home on the market in this market and it's probably going to sell in a day, but the question really is not can we sell it quickly, but it's, are we maximizing the opportunity? Are we getting as much out of the property as we potentially can? For our buyer clients, hey, even if you're having to overpay in this market, keep in mind with low mortgage rates, your purchasing power is amazing, and really the deal you're getting is an interest rate under 3%. So don't worry about overpaying a little bit if you have to do that to get a property under contract. Find out what's important to the sellers. You'd be amazed how many buyer's agents make me offers without picking up the phone, calling, saying, hey, what are the sellers looking for? Find out if there's terms that you can give those sellers. Find out what you can do to make your offer stand above the pile of other buyers that you're going to be competing with. And then last but not least, look at off-market inventory if necessary. So if you're not seeing homes that are on the market, or if you're not able to get in front of a property because you're competing against 10 other offers as soon as it hits the market, have your agent go through with you, do some marketing for some folks that are not on the market, and find out if there's anybody that is looking to sell, and maybe you can catch them before they go on the market. So a little bit longer market update today, but there was a lot of information we want to share with you. If you have any questions, concerns, comment below. If you knew somebody that needs to see this, either forward them an email or share it to them on social. And we appreciate you tuning in. We hope you have a great rest of your week. We look forward to seeing you next month.